Hi, let's talk about RCAT Holdings. It's a company, together with its subsidiaries, provides products, services, and solutions on the drone industry. The market cap is currently 240 million, and the earnings are forecasted hugely to grow over 120% per year. On the snowflake, it's still red, but it has the future growth of the analyst checks a 5 out of 6. So that's a kind of good company for in the future growth segment, based on simple Wall Street. Revenues grew by hugely, just like almost 9,000% over the past year, and there's a lot of bunch of risks. Has less than 1 year of cash runway, high volatile share price. Shareholder have been substantially diluted in the past year, negative shareholder equity, which is very serious situation, and the revenue that they have, simple Wall Street marks, is it's not meaningful. So 3 million for them, it's not a revenue at all. Latest share price, we see here that there's actually happened very much in one day, in 7 days. Look at the numbers. 1 year return 688%, and yeah, somehow simple Wall Street does not have any returns on the 3 years mark and 5 years, but we could see it here. So 1 year return, as I said, 688%, that's huge. 5 year return, it's minus 98%, and on the max side we see minus 100. So those who bought on the max frame, I think it lets, yeah, early April 12th, April 5th, yeah, when the stock price were at around $270,000 per share, but it wasn't then at this price because they usually have splits, and yeah, so if the price is decreasing, they just do a split, the reverse split, as they say, and yeah. So this actually, these numbers, what are shown in the short period, less than 1 year, are just phenomenal. The bidding in the industry, the bid, the market, and long-term price volatility considered as lowest, but I think that's because they don't have the 5-year volatility relative to market, and that's why. And industry by itself is pretty volatile. And on the valuation side, so tip ranks, neither the simple Wall Street does not have any price targets, but I found the Market Watch does. It's on average, yeah, stock price targets $8 per share, so it has upside. And if we check this, so it actually has the upside, and so the actually what it shows, somehow this shows $5 per share, but the close were, that's with the after hours. So we see here that they closed, for example here, 41% last trading date, so that was Friday, and after hours shows that there's a minus 23% already. So if the Nasdaq opens on Monday, the stock price could drop to this level, pretty normal. Of course, there's actually the aftermarket, but before the opening there would be pre-market and so on. But this actually shows the volatility that the stock does, and after hours volume is pretty high, 3.6 million. And this is actually showing that it's long-term driven pretty nicely. Of course, if we take this max frame and this long-term, it's not showing good, but mid-term, this is returning the forecast of the revenues growing. And let's take, for example, here we see the shares outstanding keep increasing, but so on the total sales. So this is actually pretty risky stuff. The short term this could turn into negative, but it has still the potential. Future growth, as I said, hugely 120% forecasted annual earning growth. They have this drive dipping in the earnings minus 10 million. Revenue is growing, and yeah, it's forecasted that they might become profitable within 2 years, actually, 2023. On the earnings per share side, yeah, so this is actually showing, it's forecasted that they might become on April 30th, 2023, and actually, yeah, no, within 2 years forecasted to become profitable. Past performance, so here we see the decreasing of the last year's earning growth, so it's decreasing by 872%. That is actually because of this drop on the earnings, and currently the company is unprofitable. Financial health side, we see here that negative shareholder equity is a very serious situation. The debt level is increasing, and they do not have even cash to cover that debt. So this is actually very, very unlikely for company, and I'm not sure if they can close that gap by just putting more shares out. So this is pretty risky situation. Balance sheet looks like normal. There's a depth, but I'm not sure why it's showing green without the shareholder equity. Basically, if the company does have negative shareholder equity and also the high level of debt, it's on the liability side is on the red. But anyway, they're not paying dividends. In insider transactions, we see here that there's buyers. There's 3 buyers. Not a significant amount of money, but 30 to 50,000. And last transaction were a few months ago, May, at price 2.83. Ownership breakdown, we see the insiders holding 60%, public holding 32%, private companies less than 6%, and institutions 1%. Top shareholders, yeah, we see mostly individuals, but also a few companies. You see here, for example, BlackRock. Last reporting holding date 30th of June, so last month, and we see here that insiders are buying. And investing.com summary the stock for long-term investors as a strong buy. Thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.